Eurozone retail sales slid for the 13th running month in May by 1.7%. The decline is greater than the 0.8% projected by analysts. Joining me today to share his insight on these figures is Janwillem Arteck, Chief Economist at Julius Baer Bank in Switzerland. Janwillem, what are the main factors causing this slide, and what is the likely impact on the household owners in the Eurozone?
This does not look like a rebound. In fact, the Eurozone and the EU households are still under pressure. They're struggling with a bad economic situation, rising unemployment. The governments are all obliged to implement austerity measures, and at the same time, inflation remains relatively elevated. So even though inflation is coming down in the months ahead because of the weak economic performance, inflation remains stubbornly sticky. So all in all, this hits quite negatively the retail sector in Europe, in particular the private household.
Shoppers in the Eurozone spent a little more freely in May, but some experts say it's not enough to make up for big falls in retail trade the month before. Do you think this shows there is light at the end of the tunnel, or is there still more cause for concern for consumers?
We've taken down our Eurozone growth estimate to 0.5% in the negative, so minus 0.5, and we foresee for next year only a slight increase of growth at an average of 0.2%. So growth is really the problem. We are cyclically in a very very weak situation in the Eurozone, and the downturn was actually quite brutal during the last winter season. And this bottoming that at best can be hoped for during the current summer season, well, we're not very sure about that, because the leading indicators that came out lately were not so comforting, even though in absolute levels, if I look at PMI figures, they were slightly better than the PMI figures in May. I'm talking about the June figures, the latest ones. We have to say clearly that the levels are still quite depressed, and if we look at, for example, other indicators like the IFO of Germany, well, one has to be very very cautious on the shop front. We can clearly see a weakness. Orders are rather on the decline. So overall, the setting is rather for a backdrop of recession to continue. And that doesn't make life for consumers easy in the Eurozone. In particular, these consumers are also confronted with rising unemployment, and that is certainly quite a depressive backdrop for consumption.
The euro stayed weaker against the dollar and the yen after the report's release. How heavily do you think this data will weigh on the market?
Yeah, well, overall, the results of the summit were rather meager. If you look at all what was discussed beforehand, this euphoria passed quite quickly away. We have now today the 4th of July in the US with closed markets, so we will get no stimulus from across the Atlantic. At the moment, if I look at the European stock markets, they're all back in the red. So yesterday was quite a transition day, slightly positive in some markets, but it was already quite weaker than the euphorious Monday. So we should be very cautious. I'm very strongly reminded of June 2011, when Greece was the center of attention. We also had a slight euphoric reaction after the Greek, the second package for Greece was made up in the EU summit in June that year, and we went into the summer holidays, and when we came back, we came back from quite in quite a sober mood, and we've seen actually after August last year quite a depressive situation on the markets. Well, I hope not that this will repeat itself, but I'm very much reminded of last year when I look at the patterns that we see evolving in these last weeks before the summer recess.
Many economists expect the ECB to cut rates tomorrow. The theory is to make it cheaper for the Eurozone's hard-pressed households and firms to borrow in an attempt to help revive the economy. However, some say the impact will be limited. What are you expecting from the ECB and the repercussions of their decision?
Well, only a fraction of what Draghi was suggesting has actually been put in place. There's a lot of discussion going on. The visions are a bit blurred. The markets are actually looking for concrete, for strong, for consistent messages. We hope that the ECB will relay some tomorrow, but the rate cut itself will only have a symbolic meaning, because if we look at the market rates in the Eurozone, for example, the EONIAs, they're much lower already than the official refinancing rate. So if we look at the overall setting, there will not be much effect to be expected from a rate cut. A rate cut will only comfort those that have been waiting for it a long time. But I think the big action is actually really on a different theatre. What will happen with the banks in the Eurozone, and how will the plans that have been started last summit, how will they be implemented? It remains to be seen.
Janwillem, thank you for your time. That's all from me for now, but click back to Dukascopy for updates throughout the day. Goodbye.